Have you ever wondered why some trucking companies fail, even when their trucks are running every day? They have customers, they have freight, they have revenue, and yet, they struggle to survive. The reason is not always a lack of business. It's a lack of cash flow. Welcome back. I'm Murugan Maruthachalam, and today I want to talk about one of the biggest silent killers in the trucking industry. The working capital trap. A trap that affects small fleet owners, growing transporters, and even established trucking businesses. Because in trucking, profitability does not guarantee survival. Cash flow does. Think about a typical trucking operation. Every morning, trucks start moving. Fuel has to be filled. Drivers need to be paid. Tolls must be settled. EMIS are due. Maintenance expenses show up unexpectedly. All these payments happen immediately. But customer payments, they may arrive after 30 days. Sometimes 45 days. Sometimes even 60 days or longer. So while your trucks are moving, your cash isn't. And that's where the problem begins. There is a gap between money going out and money coming in. That gap is called working capital pressure. Now here's where many fleet owners make a mistake. They believe that increasing revenue will solve their cash flow problems. Sounds logical, right? More trips, more revenue, more profits. But trucking doesn't always work that way. Let's say your fleet doubles its monthly trips. At first glance, that looks like growth. But now your fuel expenses double. Driver payouts increase. Toll costs go up. Maintenance requirements become more frequent. All these expenses increase immediately. Meanwhile, your customers are still paying after 45 days. Revenue is growing, but cash availability is shrinking. And suddenly, you find yourself in a situation that many transport businesses experience. You are profitable, but financially stressed. On paper, everything looks healthy. Revenue is increasing. Margins appear reasonable. Business volumes are growing. But behind the scenes, vendor payments are delayed. Loan repayments create pressure. Fleet expansion feels risky. And every day becomes a struggle to manage cash requirements. The issue isn't profitability. The issue is timing. Cash outflows happen today. Cash inflows happen much later. When those two cycles are not aligned, financial pressure quietly builds. And many businesses don't even realize it until it's too late. One reason this happens is because most operators focus heavily on revenue and fleet utilization. They track loads, they track kilometers, they track truck availability, but very few consistently track receivables, customer payment behavior, invoice aging, or cash conversion cycles. Without visibility into these numbers, growth decisions become dangerous. When cash flow tightens, businesses often turn to fuel credit, vendor credit, short-term loans, or delayed supplier payments. Initially, it feels manageable. But over time, the business becomes dependent on borrowed liquidity just to support normal operations. And that's not growth, that's financial vulnerability. The strongest trucking businesses understand something very important. Cash flow is operational oxygen. That's why disciplined fleet operators closely monitor receivables, negotiate better payment terms, avoid over-dependence on a few customers, control expansion carefully, and protect liquidity even during periods of rapid growth. Because sustainable growth is not about how many trucks you add. It's about whether your cash flow can support those trucks. And that's the question every fleet owner should ask. Can my cash flow support my growth? Because trucking businesses rarely fail because trucks stop moving. They fail because cash stops flowing. Profitability matters, but cash flow determines survival. The businesses that understand this early build stronger, healthier, and more resilient operations for the long term. If you found this insight valuable, don't forget to like, share, and subscribe. For more practical insights on trucking economics, transportation strategy, fleet management, and logistics operations. I'm Murugan Maruthachalam. Thank you for listening, and I'll see you in the next video.